Hey everyone, the best investment opportunity comes when the great stocks are available at great price. And one such company I want to discuss today is Aavas Financier, an affordable housing finance company with a tagline, Sapne Aapke Saath Hamara. This is my 8th video of next Multibagger series and there's a reason why I have covered this stock in my list. Today, India's mortgage to GDP ratio is around 11%, whereas in the developed countries, this ratio is between 70 to 90%. This is one of the biggest structural tailwind for housing finance sector in India. Now, Aavas Financiers had a great rally post IPO, but its stock price has tanked nearly 55 to 60% from its peak in last 1.5 years. The question is it an opportunity to accumulate this company or a value trap? So in this video, we are going to discuss the business model of Aavas Financiers along with its leadership, future growth prospect and key risk. But before I begin, this video is only for educational purpose. Alright, let's get started. So Aavas is an affordable housing finance company that was incorporated as a subsidiary of AU Small Finance Bank in 2011. Now you would be thinking there are already so many housing finance companies out there and every public and private bank offers home loan. Then what is so special about Aavas Financiers? The answer lies in their business model. Aavas is primarily engaged in the business of providing housing loan to people belonging to low and middle income segment in semi-urban and rural areas. These are the people who may or may not have the income proof documents like your IT return, salary slip, and hence are financially excluded by other large housing finance companies and banks. The average loan size of Aavas in FY23 was 10 lakh rupee. So they cater to very low ticket loans for low and middle income segment. In terms of product category, nearly 70% of their loans are home loan and remaining 30% are mortgage loan. In terms of occupation, 60% people are self-employed and 40% people are salaried people. If you look at its geographical presence, company started its operation from 3 states, Rajasthan, Maharashtra and Gujarat in 2012. Later it expanded to MP and Delhi in 2013. Next they entered into Haryana and Punjab and Chhattisgarh in 2017. Then UP and Uttarakhand in 2018, then Himachal in 2020 and then Odisha and Karnataka in 2021. Today they have a total of 346 branches. So if you observe, there is a pattern. They start their operation in a particular state and then expand their business before they pick a new cluster. If you look at company's financials, its revenues have grown from 0 in FY12 to 18 crore, 54 crore, 104, 191, 305, 494, 710, 902, 1100, 1300 and in FY23 it's 1608 crore. What a phenomenal and consistent growth rate. In last 5 years itself, the revenues have grown more than 3 times. And on profits, it has grown from 0 to 2 crore, then 6, 19, 33, 57, 93, 176, 249, 290, 357 and latest at 430 crore. Again extraordinary. Nearly 5 times growth in profit in last 5 years. If you look at its AUM, it has grown from 40,000 million rupee, that is 4,000 crore in FY18 to 14,000 crore at 28% CAGR rate. Company has dispersed loan from 2,000 crore to 5,000 crore at 20% CAGR. Next very important parameter in finance sector is credit cost. It's basically the cost at which the financial company borrow money. Ideally lower this cost, better it is. And if you look at Aavas credit cost, its cost of borrowing has consistently reduced from 10.48% in FY16 to levels of 6.88%. Although there is an increase to 7.61%, but please note that RBI has increased repo rate by 225 basis points and compared to that, Aavas credit cost has increased by only 73 basis points. Aavas credit cost is much superior than other affordable housing finance company. And there's a reason for this. Generally, financial companies raise short-term capital via NCDs, but they are very pricey. That's where Aavas has reached out to multilateral institutions like World Bank, where they have raised 10 rounds of funding in last 10-12 years. Please note that it is very difficult task as the process itself takes 10 to 12 months. But Aavas has taken this difficult route that helped it keep its cost low. And that is one of the biggest moat of the company. Next important parameter is ROE, that is return on equity. Company's ROE has grown from 12.9% in FY21 to currently at 14.09%, which is very good. And there is still more scope for growth. Its book value per share has grown from 305 rupee to 413 rupee. It has a very high capital adequacy ratio of 46.5% in FY23. Company has a high net interest margin that stands at 8.28% in FY23 and its return on asset is 3.51% in FY23. Company NPAs are also very low with gross NPA at 0.92% and net NPA at 0.68. Both gross and net NPA have reduced over time. Clearly on all financial parameters, Aavas has been exceptionally good with exceptional business growth in last 5 to 10 years, low credit cost, high ROE and ROA and highest asset quality with very low NPA. Mind you, the last 4-5 years were not great for NBFC sector that struggled with IL and FS crisis and then COVID. Yet Aavas has outperformed in this bad period. That shows the inherent strength in its business model and leadership. With that, let us try to understand the promoter and leadership detail. If you look at Aavas shareholding pattern over the years, promoter stake in the company has reduced consistently from 58.29% in FY19 to 53%, 50% and currently at 39%. Let me help you understand the reason for this. So like I said, Aavas was incorporated as subsidiary of AU Small Finance in 2011, but in 2016, AU Small Finance sold its stake to two PE firms, Kedara Capital and Partners Group. Here, please understand that in banking and financial sector, there are RBI guidelines for promoters to reduce the shareholding over the period of time, as RBI doesn't want individual person, family or institution to hold majority of stake in a financial company, as they can have their own interest that might not be good for the lending sector. In fact, you study the shareholding of any bank like your ICICI, SDFC Bank, Kotak, Axis, and you will find that there are no promoter stake. It's either FI, DI or public. Then second important point is, if promoters are selling stake from Aavas, then who is actually buying it? If it is going in the strong hands of FIs or DIs, then there is no problem. The problem is when the buying is from weak hands of public, that is retail investor. In case of Aavas, FIs have increased their stake from 13.13 in FY19 to 23.64, 31.86 and slightly reduced it in FY23 to 38.83. Wow, that's nearly 4 times increase in shareholding in last 4 years. And who are these FIs? It includes top names like Small Cap World Fund run by Capital Group, then Government of Singapore, then Nomura India and so on. As far as DIs are concerned, their stake got reduced as it was purchased by FI. But in FY23, DIs have increased their stake from 9.89% to 12.49%. Within DI, it includes UTI FlexiCap that has increased their stake, then SBI Life that has also increased stake, and Kotak Small Cap that has increased their stake significantly. And public holding has always been very low, that has further reduced in FY23. So don't get confused with fall in promoter stake. The weak hands of public hold very minute stake. And in most cases, if a company has strong potential, weak hand of public will always reduce its stake, and if a company has blurred future, then public holding will increase. Now coming back to its leadership, earlier Aavas MD and CEO was Mr. Sushil Kumar Agrawal, who led the Aavas in its extraordinary growth journey in last 10-12 years. But recently there is a change in leadership and board has appointed Mr. Sachinder Binder as MD and CEO of the company. He has been with Aavas as CEO of MSME business since year 2019. Prior to Aavas, Mr. Binder was with Kotak Mahindra Bank for 16 years as Executive Vice President and Business Head of Home Finance. Overall, he has 25 years of experience with Kotak Mahindra, then ICICI Lombard, then Standard Chartered and SDFC Limited. Due to lack of time, I cannot discuss the entire leadership, but I would recommend checking their team detail. They have a very strong and competent leadership team with ample experience in the past. For instance, their CFO has 30 plus years of experience, Chief Risk Officer has again 30 years of experience, and all of them have worked with top financial companies in the past at various leadership positions. The leadership of Aavas Financiers is one of their biggest moat. Now let us try to understand the future growth prospects. As far as future growth is concerned, one of the biggest structural tailwind in home finance sector is that India still has one of the lowest mortgage to GDP ratio of 11%. So mortgage to GDP basically suggests home loan as percentage of total GDP. So even today, very few people in India have taken home loan. In fact, this mortgage to GDP ratio outside top 100 cities of India is just 3%. For comparison, in US this ratio is 67% and in UK it is 90%. So compared to Western world, the mortgage to GDP ratio in India is still negligible, and that is one biggest tailwind for housing finance company. Especially for companies like Aavas that focuses on low and middle income sector of semi-urban and rural area, there's immense growth potential. As India's rural and middle class population would prosper, there would be more demand for affordable housing. Remember that majority of Indian population falls into middle class and lower middle class category. So mortgage to GDP ratio in India would increase in the future and your GDP will also increase. So both GDP will grow and your mortgage finance will grow. I think you should spend some more time to understand how big this trend is. And I'm sure this is one trend that many of you have experienced. Today, many of you would have taken home loan because buying a home is a dream of every person. And even Indian government is focused on housing for all. And that's where Aavas has a very long growth journey ahead. And that is the reason I've added Aavas in my next Multibagger list. I don't randomly add any stock in this list. Now there's a good slide that shows the size of opportunity in Indian housing finance that has a market size of 27.8 trillion rupee as of September 22. Look at the consistent increase in housing finance market size. Out of this, around 68% share is with bank and around 32% is with housing finance company. In fact, Aavas has recently conducted Analyst Day on 24th May and discussed their vision for Aavas 3.0. Company is very clear about building an organization with robust technology platform and with strong top management team. Company is eyeing an AUM growth of 20 to 25% in medium term. Aavas plan to open 30 to 35 branches every year and plan to enter a new state in every 3 to 5 years. So going forward, in Aavas 3.0 journey, technology will be a center point where Aavas has started transformational project to reduce its TAT, that is turnaround time, from current levels of 10-12 days to 6 to 7 days. So turnaround time basically means the time taken from submission of the loan application to loan disbursal. So Aavas is planning to reduce this time from 10-12 days to 6-7 days. Aavas is focusing on a phygital model with best of class technology combined with brick and mortar. I found a very interesting slide of the journey wherein Aavas 1.0 the focus was on proof of concept of affordable housing finance model under AU's ownership. During the period, Aavas AUM grew from 0 to 16.8 billion rupee, that is 1680 crore, and branch network grew from 25 to 44. Then promoters got changed and two PE firms, Kedara Capital and Partner Group, joined as promoters, where it built the foundation for scale under PE ownership. Its AUM jumped from 16.8 billion rupee to 26.9, then 40.7, 59.4, 78, 94.5 to 113.5 billion rupee, that is 11,350 crore. What an exceptional journey. And its branch network has jumped from 44 to 346. During this journey, Aavas had 1 CXO in 1.0. It got increased to 4 CXO on 2.0, and now in 3.0, the CXOs got increased to 10, where the focus is on scaling and institutionalization. The big question here is, if there is so much of potential, then why Aavas share price has crashed 55 to 60% from levels of 3,000 to current levels of around 1,400? Let's figure it out. So if you look at Aavas share price journey, it launched its IPO in 2018 at levels of 821. But then Aavas share price kept on rising and touched 2,000 rupee before COVID. It did fall during COVID, but again made a high of 3,000 rupee. So almost 4 times growth in share price within 4 years. As a result, its valuation kept on rising and PE ratio touched a peak of 77 and PB touched a peak of 10 that was clearly not sustainable. Now please understand that no matter how good a business is, there is some reasonable valuation to it. You can't just give any valuation. Of course, that was the bull run and hence the share jumped exponentially due to its immense growth potential. But then we saw liquidity drying up and its share tanked from levels of 3,000 to currently at 1,400 rupee. With that, its PE ratio has fallen to levels of 25 and its price to book is now at 3.4. So first reason for 55 to 60% correction in Aavas share price was exorbitant valuation. Those valuations were not sustainable and hence the share price has corrected. Then there is second reason. It's due to change in leadership. As discussed before, Aavas was led by Mr. Sushil Kumar Agarwal, but recently there is a change in leadership and board has appointed Mr. Sachinder Bhinder as MD and CEO of the company. Although Mr. Sachinder Bhinder is looking extremely competent to lead Aavas, but this change in leadership has created negative sentiment as market doesn't like change in leadership. It always creates uncertainty. Mr. Sushil Kumar Agarwal has recently reduced his shareholding from 3.3 to 1.5%, so that has further resulted in correction. Having said this, it is an uncertain period like this that creates an opportunity to add great businesses at right valuation. But of course, only if you are a long-term investor. So if you are a long-term investor, this correction is a no-brainer to accumulate Aavas for long-term. But of course, at the end of the day, you need to do your own research so that you can build a conviction on your investment. Aavas is also a part of portfolio of Marcellus Group of Saurabh Mukherjea in 3 of their portfolios, Kings of Capital, Little Champ and Rising Giant. Now let's try to understand the key risk. As far as key risks are concerned, there are 2 key risks. First is fall in yield due to competitive pressure. Now there are a lot of players in home finance space, including your top public and private banks, as well as specific housing finance companies like your HDFC Limited, LIC Housing, CanFin Homes, Aptus Value Housing, Hutco and many other NBFC. Although bigger banks certainly have very low cost of borrowing, but their key focus is on high ticket loans rather than small tickets. So essentially large banks are not the direct competitor to affordable housing finance. Aavas has an average loan size of around 10 lakh. Now for a 15-year affordable housing loan, the monthly EMI is around 12 to 15,000. Now even if a competitor offers a lower rate, this EMI amount won't change materially. As a result, Aavas has a very low customer switching and poaching from other banks. Having said this, it is not easy to compete while maintaining good yield. If there is competitive pressure, it might impact Aavas yield and eventually the profitability. Then second risk is rise of NPA. While Aavas would continue to focus on growth, it has to ensure its asset quality is not compromised. Since it caters to low income category, NPA risk would always exist. Although currently the NPAs are at an all-time low, which is great. So in this video of next Multibagger series, we discuss the business of Aavas Financiers and its future growth prospect. And I have no doubt about the quality of its business and leadership. Extremely top-notch. There is immense growth potential in Indian housing finance sector, but only efficiently run companies will take the major pie of this growth, and Aavas falls into this category. We also discussed about the promoters and the reason for fall in share price. And after 55 to 60% correction from its peak, Aavas is looking very attractive. Yes, there's a leadership transition and that has created uncertainty, but it is the opportunity like this that result in great companies available at great valuation. Now from here, there can be further correction here and there, but for long-term investors, this is a great time to buy right and sit tight. Personally, I don't invest or discuss stock for next 3 to 6 months or 1 year return. I only invest and discuss business for long term. And just like you need a solid foundation to build a house, Aavas can be one solid foundation in your long-term portfolio. Having said this, make sure that you do your own research before investing in this business. I have shared the research I have done, but I can also go wrong sometimes. With this, we'll close this video. If you found it useful, do share it with your friends. I'll see you in the next video. Till then, take care.